And we are live, guys. Welcome. How are you doing, James?
Very good. Good afternoon, you guys.
Mando, how are you doing?
Yeah, doing great. We're still in the boredom zone. 69K is we start every single show, it feels like, at that level. Kind of crazy.
It's a tradition.
Yeah, a slight twist this time around. It was the only weekend that I went into not feeling like there's going to be a weekend pump. We didn't really get that. So
really?
Part of what we're going to probably talk about later with the lid on the price and what's causing that.
Is that like as bearish as you ever get? It's like you don't think it's going to pump for one day.
It just the setup wasn't there at all. There was a lot of, the sentiment was negative. There's still the Moon Boys calling for 180,000 by the end of the year and stuff like that. But it just didn't feel right, and the volumes are so thin. I thought maybe we might not get a weekend pump, so I didn't get excited and tweet anything this weekend.
Oh, really?
Yeah.
Well, that makes me feel even more bullish, because what I've been saying is I think people need to lose hope slightly for us to maybe touch like 67K and then we gig ascend out of this. Like that's the only way you get out of a range like this, is when people like you, James, you lose hope for a few days and then it goes full send.
I'm not losing hope. It's just there's a lid on the price action.
Yeah.
And analyzing as well. I did an experiment over the weekend, and a question that I had was, which is the best day to buy Bitcoin since the ETF, since January 11th? And that still was Monday. Historically, for 14 years, it's been Monday is the best day to buy. And it still is since the ETFs, just in that window of time. So that was fascinating. But there was a change on the second best day, which moved from Sunday to Saturday. But we didn't get any action this weekend either way. So it's very bizarre.
The weekends have been dead. They've been completely dead recently.
It's the DCA effect, guys. Mondays. So we will cover the Bitcoin price. We'll go more into detail. We'll talk about the Bitcoin basis trade and what it is. And Mando and James will walk us through it. Stablecoin flows. Banks are predicting Bitcoin price now. Who would have guessed a few years ago? We'll talk about rate cuts in Europe. We'll talk about the US, possibly fake, labor data. We'll talk about politics and its impact on markets and BTC. Call it the rise of the right. We will cover altcoins. We'll cover stocks. We'll cover NFTs, memes, other altcoins, and more. And guys, welcome to ask questions in the comments, and we'll try to pick them up during the show. But let's start with what is driving the market here, and it is Bitcoin. I will give the word over to you both to ask what you think about the market. I'll just point out some technical details first, because I think it can be useful. And it is support and resistance. These are not magical lines. It just means that people remember price levels. I was positive last Monday. Price did go up, and it hit the same resistance level at 71,400 that we have now. And let's count together. Hit 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 something times. And still I see people going online and buying right below resistance. That's not a very great tactic. It's better to buy either at breakout or at support. We all make mistakes, but let's try to make new mistakes and not repeat old classic mistakes. So that, from a technical perspective, is one observation. I have one other observation connected to yields, but we'll take that later. How do you guys see the price action from here? Why are we not breaking out? When are we going to an all-time high and so on? Who wants to start?
Yeah, I mean, it's a difficult one, because I think we've come on this show and we've all been bullish for a while. I think the data that we're seeing is getting a little bit confusing, because we're seeing huge inflows into the ETF. I think we saw 2 billion of inflows into crypto products alone last week, and that it's been about 4 billion over the last 2.5 weeks or 3 weeks. So a very, very decent period of inflows. And that being said, like, some of the other metrics haven't really looked as risk on. So like funding hasn't really particularly gone overly aggressive, although you've seen open interest rise. I think we're definitely going to get onto it. But I think one of the main things that's been going on is the rise in this futures versus spot trade. You buy the Bitcoin ETF, and then either hedge funds or other sophisticated actors are shorting futures, and they're being very boring in the crypto market. They're just taking the yield on that difference, which is quite high often in crypto. It can get up to the teens, 20, 30%. At times a few months ago, it was as high as 100% even for Bitcoin. So that's been the trade which a lot of people are getting into. And so it's kind of muddying the water on what are the real flows, the real actual buying into crypto, because the net of that move is actually quite limited if you're buying spot and then shorting futures.
Mandy, sorry to interrupt you. Can you explain it one more time? What is this trade, and why are these hedge funds doing it? And I mean, they're doing it into the billions, so clearly they're onto something. But can you explain it, just what it is?
Yeah. So traditionally in any market, when you buy a futures product, you have to pay what is called funding. And that's what gives you whoever gives you the leverage, the cash to actually take on that position, they will charge some sort of funding fee. And normally, in most markets, you have to pay to be long. So because most people have a long skew, so you will have to pay the equivalent of around, at the moment, it's about 20% on Bitcoin per year. On the notional that you have in your futures contract. What you can do then is buy Bitcoin itself rather than buy the futures product of Bitcoin, and then you can go short the futures, and that means you actually take that 20%, i.e. longs are paying shorts in the futures market. So your net position is basically zero because you own spot but you're short futures, and you're just taking in the yield of that difference. And this is super attractive to hedge funds because they're looking for returns in that sort of a range. So they're looking in the 10 to 30% range is like incredible for them. And
do you think that this has been a significant part of the, say, ETFs, the spot ETF holdings?
I don't think it necessarily was at the start. But I think what you saw is some very, very well-known hedge funds have come in and done it. And it's increasingly becoming a very, very big thing. And the thing to look at there is the fact that funding is not going that much higher during this move. So even as we've gone higher, normally when the market starts to rally or you start to see inflows, particularly spot buying, you would normally see funding in the futures market going higher. And actually funding stayed relatively low throughout this whole time, even as we've seen huge inflows into the ETF and huge amounts of spot buying, which tells you that people are putting on this trade. They're shorting futures. So, even that explanation, people might not understand it, but basically people are coming into the crypto market and they're not really buying Bitcoin. They're just buying the yield of, or they're getting exposure to the yield of other people who are naturally buying Bitcoin.
Thank you for that. At least for me, this was a very helpful explanation when you explained it the first time, that when we're looking at the inflows in the spot ETFs, we also need to look at if that it's followed by a corresponding increase in open interest on the short side in the futures market, because then it isn't really inflow in that sense.
Yeah, it just adds to the complexity of the risk in the whole market. So we have seen this open interest has hit all-time highs on Bitcoin, on ETH, and various different exchanges and overall. And that points to but funding hasn't gone higher. So again, yeah, that just points to this trade being put on. It's probably being put on in Ether as well, particularly ahead of the ETH ETF. So that's what I think is some of the inflows, which is why we're like, a lot of people are scratching their head and going like, what is going on here? That being said, like, I think you can still look at stablecoin inflows, and that will give you a much better, I think, sense of the true inflows into the market. And those are creeping higher. They're nowhere near the same sort of scale that we've seen in the Bitcoin ETF inflows. But for example, since the start of, let's say, June, I'm just looking now, it looks like we've gone up roughly $1 billion since the start of June in stablecoin inflows. So that gives you a much better sense of what may have been the true sort of inflow. So it's a much smaller figure than what the ETF would have you think.
Very helpful. James, what's your take on the market action here? You're on mute.
This carry trade has been happening for a long time in other markets like gold, silver. You could argue to a large extent for many decades. It's not a new thing. What is really interesting to me is I track all the ETF flows every single day that there are any. And for the first, I think it was 91 days, there was an 85% correlation between the actual inflows and the Bitcoin price. But the last 15 days, that completely changed. That went from 85% to about 61 to 65%, depending on how you measure it. So I found that to be stunning. So I think my theory is the hedge funds have decided to get in big. And you look at the $4 billion that came in over the last 19 days, I'd say half of that is hedge funds, or at least a quarter of it. That's kind of my theory. And again, just so people are clear, when the hedge funds short these futures, it does create selling pressure, or it creates enough selling pressure to put a lid on the price action. But the problem we have now is we have all-time high positions, futures positions. That eventually can and will break. Mando, what's your take on what is the catalyst to snap that? Now, for me, we need to have a huge inflow of money. We need a whole bunch of treasuries buying a whole bunch of Bitcoin, or a few more sovereigns, or a few more Mr. 100s. Or and this is what I can't put my finger on. I know it will break, but I don't know when.
Yeah.
What would it take for it to break?
So I only see this in smaller markets. But yes, generally, if everyone's taking a lot more risk, something can often break. And how I would normally view this is if that funding were ever to go negative, and it can go negative. And like you said, if you saw real inflows, let's say Qatar said, hey, I actually want to come in, I'm going to buy 50 billion. Yep. I'm going to buy 50 billion. You could see very quickly the funding could go negative, and then you'd see an unwind of those positions. And one thing you have seen is that, like, even on a very small drop, like Bitcoin dropped 2% maybe on Friday, and you saw hundreds of millions of dollars of liquidations, absolutely massive liquidations. And similarly, I think on any move higher, you will see huge liquidations of shorts, huge liquidations of shorts. And the reason why that can be important is because they can be quite messy. So if you did see a really big real buyer come in, not only would that trade suddenly turn against these hedge funds, it could you can get like a liquidity move where futures essentially starts trading at a different level to where the spot price is trading, or effectively they get burnt on the yield if they don't get out of it in time.
And then some will have to cover, which could result in a nice little God candle as well.
Right, exactly. That's basically what would happen. They'd have to cover the short side of that trade pretty aggressively, or you could be in it and be paying negative yield to stay in the position. So basically, one of the hedge fund, and I know one of the main ones who's put this on, has found a good trade here. They've told all their mates, or all their mates have realized that this is a good trade. Now everyone's piling into it, and they're piling into it in more and more and more and more size. And at some stage, this always ends up breaking. Like, this happens in crypto all the time. It happens in crypto all the time, and this sort of stuff happens.
It reminds me of a kind of a 2024 version of the carry trade from GBTC back in the day.
Yeah, it's very similar. It's very similar, and also like the grayscale trades, even the MicroStrategy trades, are all this sort of like, we're going to put on a basis trade here. They would call it basis, carry, similar sort of ways of looking at them. But basically, a no risk arb trade is how they'd be pitched to their bosses, and then they don't understand that there can be underlying risks to these sort of trades if everyone starts doing them.
Good. But I think the biggest question that I've been hammered with for the past week or so is, when does it end? And it will end. But people just get so impatient, especially in a bull market, which is interesting. Anyway, over to you guys.
Exactly. So we covered the basis trade or the carry trade, the stablecoin flows. Anything, James, you want to add to that? It is really a huge inflow of I think into stablecoins, which is, when that market cap increases, it is actually real money, as opposed to the rest of the market cap for speculative coins, where market cap can go up without so much extra inflow. But here it is real money coming in.
Well, you know, Ivan always says when Tether prints, buy. It's that simple. But
Exactly.
16 billion in a quarter is huge. But also, there's now $60 billion in these ETFs. You know, 4 billion landing in 19 days, over 21 billion in BlackRock. And that combined with the stablecoin inflows too, there's a lot of money coming into crypto. I know a lot of people don't like the fact that ETFs are here, but literally they bring in more money than retail investors ever could. So especially with the price point of Bitcoin now at the 70,000 level, it takes a lot of money now to move a $1.4 trillion asset. And that's the other thing that people need to be aware of. You know, I calculated as well, the average DCA amount per week for a retail investor into Bitcoin is $50. $50. Now you take 4 billion, you divide that by $50. That's 80 billion people need to DCA, just 80 million people, just to match the ETF flows. So
yeah,
it's kind of bonkers. So
James, do you want me to add your slides to the stage? Should I?
Oh no, I'll pop it up when we have something fun to talk about.
That's great. Then let's move on to something else which I think is interesting. And the first thing is the yields. Let's take that first. So the ECB, the European Central Bank, they lowered the yields this week, 6th of June, by 25 basis points. But in the US, it's looking less clear. The target probabilities for 12th of June is unchanged. So current rate is, maybe I should make this bigger. It's already small. So current rate is 525 to 550. Everyone agrees on that for June. Almost everyone for July. In September, most people still think no rate cut. Then November, most people think there is one step rate cut. So, to 500, 525. And if we go to the end of this period, September 2025, majority people think it's 425 to 450. So only 1 percentage point below current levels in September 2025. And the reason I think this is interesting, rather than just as an academic exercise, I will show you something very practical before we go further. If we go down to 1 hour time frames and we look at the US dollar 2-year yield, you can see something which is why I think this is so useful. On Friday at 12 o'clock UTC time, we had this huge spike in US 2-year yields. Then if we look at Bitcoin price at 12 o'clock Friday, Central European time, we did have some movement, but it wasn't much of a dump. Price dumped a little bit, but then it came back the next hour. But then a couple of hours later, we had this big dump in Bitcoin price. And you can often see this, and that's why I think this is so useful. And it's not always the case, but if we look at the yield curves in more detail, this was a very significant move in the yield, because here is the support and resistance level. Here it was resistance, resistance, resistance. Then it became support, 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 support. And just like everyone is watching the resistance level in Bitcoin, a lot of people are watching this level to see here, will it break down? Will it finally break down? No, it bounced. And it bounced big time. And then a few hours later, we see a huge dump in Bitcoin price. And you follow the channel, I've talked about this so many times for the past 1.5, 2 years, that it's often been that. I'm not saying it's the yield which is dumping the Bitcoin price, but it's change in macroeconomic environment which puts a wet blanket on the mood for speculative assets, which is the same thing then that creates a pump in the yields. So what will happen to these interest rates and these yields is practically useful. So if we can stay a little bit ahead of the market, try to understand what will happen, that's practically useful. Even if you're not interested in macroeconomics, you're just interested in trading Bitcoin. But it has happened now for, I don't know, 20 times or something, that it's been practically useful like it was here last Friday. So what do you guys think will happen about the yields? I know, James, you have insights about the labor data and so on and so forth.
Yeah, it's all kind of related. First of all, if I can add this to the screen, how do I do that? There we are. Nobody needs a rate cut more than the US. There's nearly $10 trillion of debt that's going to mature within a year, and that's going to roll into a coupon of 4.5%. Amanda, I see you nodding your head there. Do you see the same thing I see?
Like, they have to cut rates. Like,
yeah.
I know. You had this argument a few months ago, right? When Japan basically had to call them up and say, "Hey guys, you got to cut rates," because and they own all the debt. So yeah, this is a prime example of why they will need to. I agree that it's more about the pace, but there's no way that they can't.
And there's three theories as to why. I have three theories, and they could be all completely wrong. Why Jerome Powell and the Fed are doing this: one, to trigger a great reset; two, to burn the Democratic Party; or three, I don't know, to get to this magical 2% inflation rate, which they don't control. You know, a lot of it's driven by factors that are not, under their control. But the point is, when this happens, the interest that the US pays on debt will be 2 times the defense budget, which is one of the biggest budget items that the country has. You know, that's crazy. And then Fed rate cut percentages, this is from Polymarket. I thought this was interesting if it came up, so I had it in the deck. But, 43% by September, 62% by November. That's when the elections are happening. And that's more than half. So I think I trust this more than the Fed board, the CME futures, to be honest, because people are placing real money on this. So I think there's a good chance. And remember as well, risk happens fast. So once something breaks, they say 62 banks are on the threshold of hitting the wall right now. It's really, and when that does happen, they're going to have to do something. They're already started to print money as well. And one other factor too is the job growth data. And this is kind of stunning. This basically tells you that the government is lying to you when they pretend they issue, like, markets all over the world trade based on the Friday US jobs data. Markets all over the world trade on this, and it's complete BS. All right. There's the what's the survey, the management survey, the household survey, which is the truth, where they interview actual employers, and the other one is based off 55% of all payroll added in the past year are an Excel spreadsheet assumption. Many of these businesses are even out of business because of C-19 and other stuff. It's just, the whole thing is really ridiculous. And then this ties into another point we may talk about later. This is the amount of jobs created over the past 6 years in the United States. All of the people there's zero job growth amongst people who were born in the US, and this has been floating around Zero Hedge and other places. But all the new jobs are going to immigrants, which is actually causing a little bit of tension out there in the market. So that's the quick and dirty story of what's happening out there between macro and interest rates. And it's weird, but the good news is money is what matters, the amount of money being printed. We've shown that even in a high interest rate environment, disruptive stocks can still do very well, and crypto has done very well. So it's all about the money flow at the end of the day. What say you guys?
Yeah, I think it's an interesting one. I think all the points you said there are very valid. I think people have to understand that figures here, they're always assumptions. They are done terribly. Like, there's been ways to try and do inflation data better, employment data better, but generally they take a small sample size and then they extrapolate that and they make assumptions on the back of it. So in the way that economic data is done, people have to understand is done very, very poorly, or at least has huge assumptions in how it is done. So there's part of that. I think one thing to note here is that the US has got to cut rates. I don't see a way out of it with the situation that it's got. Like you said, 2 times the defense budget. It's just completely wild. We're talking about like trillions of interest rate payments per year. I think the rate cut, the reason why it's November is it's because it's kind of political. Remember, Trump is coming out here and saying he wants to not only fire Jerome Powell, but take executive control of the Fed and the decisions that they make. The idea that the Jerome Powell would then make a rate cut in September or even August might be politically tough. Like, it's going to be seen, whatever he does now is going to be seen as quote unquote political. And I think that's something that people have to understand going into this more than probably any other election. Like, I haven't heard the US president ever come out and say, hey, I want to take executive control of the Fed before, or at least have their decisions run by me when it comes to rate cuts. So I think part of it is that's the reason. And I think the election is November 5th, and that Fed meeting is like November 8th. So it's just after the election. So that will probably be the most politically okay time to do a rate cut. The reason why we saw that spike in yields is because you had this good employment data figure that came out of NFPs. Before that, we've been seeing slightly weaker data come out of the US economy. Not horrific, but just like a slight slowdown. And this was the first time it seemed to be rebounding. So that's why you saw yields spike. But who knows with the data? I think everyone is pointing to the idea that the US, even if inflation is high, they just can't keep interest rates this high. Like, they just, not only are a huge amount of the owners of their debt foreign, but it's damaging those people in those economies, and they are going to be knocking on the door saying you need to start cutting rates, and just generally for risk assets. So yeah, whether you think the data is true for inflation or for employment, I think it's more just like, look at who the buyers are of this debt and what they need to have happen. And that's kind of what's going to happen here. So my guess is that the data will suddenly start pointing to the idea that we need to have rate cuts just after the election, because I think it's going to be highly political to do anything before that. So I'd be unsurprised. I do think we'll see a more dovish Fed on Wednesday, but I don't think we will probably see a rate cut, or at least aggressive amount of rate cuts before the election.
So let me just explain, because I saw some people in the comments. The reason that I think this is very important is that if this supports break, for example, and the yields start looking like this, based on historical events, it's possible that that's followed down by a pump in speculative assets like Bitcoin. And I think that could be what's needed to push this over this resistance level that has rejected Bitcoin price now 12 times in a row. So that's why I think this is a very important discussion. If I saw someone wanted to know which date will we hit 100K, but it's not that easy. No one here sits with that information. But if we can kind of break it down, what is needed for a move to break through a resistance like that, that could be one event. Of course, there could be other things happening also. There could be other events that changes the mood of the market to push price through this resistance that has so far been too strong to push through. And you touched on something there, James. We called it here the rise of the right, that there is a political shift both in Europe and I believe in the US from perhaps a little bit of like a counter reaction to the woke trend that has been over a couple of years. And it seems like, I know in the US, the Republicans have more tailwind now, and we're seeing similar things in Europe. We will not have any political opinions here on the show, but it can be good to understand how these different policy decisions of these different political fractions could impact the markets, like how, depending on who wins the election in the US and in Europe and so on, how could that change policy decisions around markets and so on. Is there any insight here, guys? I'm a beginner. I'm an engineer, so I don't know.
Yeah. And to be clear as well, I don't care about politics. The only reason I'd ever even look at it is because I believe both sides, left, right, middle, they all lie to you. They all pander to you. They tell you what you want to hear. However, what we do care about is things like freedom. We care about crypto and Bitcoin and sovereignty and truth. And I think a lot of that points to kind of why we are interested in crypto. And there is a lot of evidence suggesting there is a correlation between, this is going to sound really bad, the right, okay, and the use of Bitcoin. And several studies have reported that, you know, groups on the right and individuals, they have a much higher penetration or adoption of cryptocurrencies like Bitcoin. And that's because of the decentralized nature. And this aligns with maybe the right is anti-establishment or anti-regulation or pro-freedom. I'm not sure. But the results, the election stuff I was looking at last night come in across Poland and everything else. And there's another factor that has to be a little bit concerned is sometimes when people have no opportunity when they're very young, and from studying history, we saw this happen before, you've got a huge concentration of the youth in Poland under 30, all voting hard right wing. And maybe part of that is because they see they have, when young people have no opportunity, no money, they don't embrace capitalism, but they go much more towards nationalism. And I might be going down a complete rabbit hole here where I'm completely off, but there's a balance that needs to be found between right and left, freedom, crypto, but too far left, too far right is just dangerous. People need to spend more time in the middle where it's safer. So that's my thought. Mando, what do you think?
Yeah, I mean, I wouldn't say Bitcoin is necessarily a left or right. I think that the closest you can kind of come in terms of political allegiance is probably libertarianism, which is more of a left-wing movement originally, but now seems to be also right-wing, and just the idea of personal control of your own actions, and that's become slightly more anti-government, but also like a bit of it associates it more with the protest vote, I would say. And what you've seen is the rise of populist protest votes has generally recently been more right-wing style votes. So that's why it's been aligned with those sort of movements recently. We could be talking about this in 20, 30 years, and it could be aligned in a completely different way with a completely different party. I think the idea is it's more of a counterculture style movement. So, but we are seeing that now that, you're seeing a rise in this. Europe is obviously moving this way. I would say that, just like I said with monetary policy, like, we are scared about the idea that the US is going to have to basically admit that it's bankrupt if it keeps interest rates that high, because other countries which are also bankrupt are scared that of the money that they own. Like, just wake up. Like, this is just a joke. Like, Bitcoin loves a crisis. It loves a crisis in monetary policy, and my guess is it's probably going to love a crisis on the fiscal political side as well. So, yeah, I'm bullish on Bitcoin as turmoil arises in many aspects of society.
Bitcoin loves the crisis. I've been saying that for years. That really came to the fore in March 2023 when Silicon Valley Bank hit the week. I remember I had people calling me up out of the blue that never believed in Bitcoin, and they were saying, "How do I turn $500,000 into Bitcoin right now?" Because they are so afraid. I mean,
of course. Like, there was something today that so today the petrodollar agreement between Saudi Arabia and the US comes to an end, I believe, which has been a multi-decade agreement. And obviously Saudi Arabia has been doing different deals with different BRICS countries recently, most notably China. And there's been an idea, this could hurt the dollar. And people were saying, this could be bad for risk assets if the dollar starts getting challenged. I was just saying, like, everything just goes back to just the idea that you just own Bitcoin. Like, all of these things are just pointing to the idea that the fiat system is coming under threat. The idea of one currency controlled by a government being ever powerful is coming under threat, and the idea of being able to print your way out of capitalism problems is coming under threat. And it just feels like, I don't know. Yes, correlation could be one and all these down. Like, we spoke about this even with Japan a few weeks ago, but like, correlation could be down on these down moves. Correlation could be at one in these down moves, but eventually everyone's going to come back and be like, yeah, probably should own Bitcoin at the end of this, because it feels like, decentralized pockets of value are just becoming so obvious.
By the way, Bitcoin, as usual, DCA at pumps has gone up $700 since we started. I just want to mention that now, in case anybody cares. The pump is back and it's alive again. Do you see that, CTO?
I'm checking it. Let me pull it up. Let's switch the time frame.
Go to the 1 minute.
Exactly. Let's switch. Oh, look here.
Let's go.
Let's go.
And then tomorrow it'll be down again. So don't get too excited, everybody. Unless, of course, the hedge funds, etc., get pushed to a stage where they have to start covering, and then things get really exciting.
Watch if funding goes negative. If funding goes negative, that's the sweet spot. That's when you've got them in the crosshairs.
We have 5,127 viewers now. It was the 27th there who was the billionaire hedge fund manager who realized, oh, is it Bitcoin is on? I have to press the buy button, and he bought that. It's a joke. But who knows? Should we switch gears and talk a little about the favorite topics of altcoins and how they are doing? And I can start off by pointing out let me switch it. Did I show the Bitcoin price, or did that not show on the...
No, it did show. Yep.
It did show, yeah.
Yep.
So we can note the amazing fact that despite the huge news about the Ethereum ETF, nothing really happened. So this is Ethereum to BTC. The only thing that did was to bring Ethereum back into the range, but it did not break out. So Ethereum is back to the same level as half a year ago. And it didn't break out. That was otherwise a pretty huge news, but then nothing happened. It hasn't started trading. There's no inflows. So basically back in the range. And if we then compare that with some other major altcoins, the other two in the top three, BNB has had a completely different ride the past half year or so. And of course, no one on the show has missed what has happened with Solana during this time. So it is really noteworthy, I would say. And yeah, what's your take on this? It really became a nothing burger so far on Ethereum.
I saw a fascinating chart a few days ago, and I forgot to save it or share it, but it was basically Bitcoin versus the crypto market cap, excluding the top 9 altcoins, and it basically these anything outside the top 10 has done nothing for 3 years, and it's a very scary chart. Did you guys see that?
Yeah, I put it in our group chat. I would think I was the one who showed it to you.
Yeah. I knew I saw it, but I couldn't find it. I was looking from the research group.
Crazy chart outside the top 10. It's like basically it hasn't moved, like you said. Hasn't moved in 3 years.
What's the message that you take away from that?
It's a scary message, and I think we kind of come back to it a lot. Is that to be in altcoins, you have to have incredible conviction that they are going to outperform Bitcoin and Solana and ETH or any of these like top L1s, let's say. And even if they are going to outperform, like it could just be transient. So probably take your winners when those sort of trades play out. I think this cycle, I continue to think that Bitcoin dominance probably stays where it does, even as we move higher. So I'd be very, very wary of waiting for an altcoin season and stuff. The BNB thing in particular, I think, is interesting. It's come back incredibly strongly. The low point was literally CZ's conviction, right? And there was a lot of talk that they might have margin loans at that level, and around it when it was trading around 200, and a lot of doomsday predictions like FTX, which didn't seem to make sense to me at all. And I was pretty vocal at the time that I didn't think this was FTX. They have Merkle tree proofs, which is basically a way for them to show their inventory, and they do that fairly regularly. So this didn't look like it had a huge hole in its balance sheet, although you can't see the liabilities, but they'd said publicly that they hadn't done any BNB style loans. Anyway, it's come back rip-roaringly higher. I think 3 reasons for that. Gaming that they've got quite a good mobile gaming platform with Binance, and they see decent volumes there. They've seen some DeFi volume. Like, I think their on-chain volume is hit a high last week. So they're definitely seeing some of it from gaming, some of it from DeFi, although largely the meme coin cycle isn't on PancakeSwap this cycle. It's on Solana. And then the third thing is the Launchpad. So the reason why you would own BNB is because if you then put it into the pool, you get the chance for any coins that are launched on Binance, and you get it as essentially like an airdrop. So those are the three reasons. BNB coins, they haven't really performed that well this cycle as in their Launchpad coins, but they said they were going to make big changes to it. So hopefully people are getting more bullish on that. And also there was a big short base. One thing that had a huge short base all the way up. A lot of people were long Solana, long ETH, long Bitcoin, short BNB, even throughout the whole of this move. And so that's unwound as well to a large extent. BNB had negative funding, which indicates shorts are shorting it more than longs for the majority of this year, and it's only reversed in the last couple of months.
Yeah, very interesting. What's our take on Ethereum? Because I know a lot of people are interested in this, and it's shocking how little happened in a way as a result of that Ethereum ETF. Does it mean that there won't be much Ethereum inflows? Is it the problem with the staking that you kind of don't get the staking returns, or is the market wrong?
I think there will be some inflows to the tune of maybe 15% of what Bitcoin took in. But the problem is the big unlock from Ethereum Trust at Grayscale, because we're going to see this the first 90 days. There'll be a huge amount of unlocking of that from the speculators that got into that trade. We hear live. I saw that ETH having a 55% discount live on a show with you, CTO, back in 2023. And I went in and bought it. I got rid of it at 10% discount. So that's kind of what happened there. But I have another chart here which shows the three across DEX volumes. So I just think it's very interesting. We can pop.
Can I just interrupt you 1 second?
Yeah.
Because that was so good. That moment during the show when you showed that Grayscale discount on the Ethereum, I hadn't seen it up until that point. I had been tracking the BTC Grayscale discount a lot. And then suddenly you show that, oh no, but the Ethereum discount is even bigger. And it was like an enormous opportunity. And that's why I love you guys. Like, I come on this show, of course, we're trying to deliver something useful for everyone on the audience, but I'm learning something every single time we're having these shows on Mondays. That's why I love it. I always learn something new. There's some new insight, something I didn't know that was, hiding in plain sight, but I hadn't seen it. I didn't see it was important, or there's some insight or some learning. I love you guys, and everyone listening here. If you feel that you learned something, please subscribe to James InvestAnswers and Mando on the links are in the description. Mando has Twitter and also a website that is where he sends out the newsletter. That's very useful. And James, of course, has his YouTube channel. And
yes.
Okay, please continue. I just wanted to make the point.
Share that slide there, because one thing that's kind of interesting is how much DEX volume has increased and how consistent it is. We had a record 4th day in a row of Solana DEX volume exceeding Ethereum and Binance Smart Chain, the next two big ones. But some days were a lot higher. Solana had a $2.5 billion day about 3 days ago. But this is interesting. And the reason I share this is because, Mando, you said Binance has a really good game or something. Video games are not something I'm familiar with. But
yeah, it has mobile gaming. But yes, Solana's dominating this.
Yeah, but do you believe there will be chains for different niches in the future? Like, I thought Avalanche was the gaming chain. Maybe it's Binance now, or
I don't know. When it comes down to gaming, I think a lot of people can say they can be good for gaming. You just need something that's fast and cheap. I personally think that Binance and Coinbase, they probably will have centralized chains attached to them, and they will probably do well. Base is not going to have a coin. It says it's not going to, but I think it will. And Binance is just the Binance coin. And I think they're able to direct, firstly, launch pads onto their own chain. They're able to attract builders onto their chain, and they're able to do good marketing. And it's far more consistent than the Avalanche Foundation that has to dump AVAX on you every 5 minutes. Like, these are businesses that generate money because of they're an exchange. So they can quite natively spin up new things for their chain. So I think BNB, the death of BNB was massively exaggerated. I think BNB is going to be here for a long, long time. Balance is probably the biggest organization in crypto. It's going to have its own chain. Similarly, I think Base with Coinbase is going to be here for a long, long time. But yeah, Solana is the casino. I mean, again, I don't want to get into meme coins too much, but this was because of meme coins. A bunch of celebrities came in and did meme coins. We kind of touched on it last week, but Andrew Tate actually came in and did a few of them. One of them did nearly like $1 billion of volume in a day. Just insane volumes going through Pump.Fun meme coins, again, dominating this, along with stablecoin transfers. But that is where all the action is happening. That is where it's all happening.
And one other thing, like CTO for you, I found this very interesting, and I want to bounce it off both of you. There's a lot of, crypto is toxic. Probably want to get that thing out of the way first. If you say something bad about somebody's coin, you become the enemy somehow. But we're all in this together, okay? People can own whatever they want. We don't care. But when you see some of the data floating around in tweets, like Mert from Helius, he has a development firm on Solana, and he believes that the number of developers are far underreported for the Solana chain. He says, and this is what got me, because I track developers from independent developer reports of how many there are across all the chains. And Mert from Helius, which is a small dev shop, says they have more developers than Polkadot. Now, the reason that matters is because when you look at Polkadot, it's number 3 on my developer activity list. So, CTO, as a CTO, what do you think of this data? Is that even possible that there are developers developing on a chain, but they're not publicly recorded? They're off doing stuff on Pump.Fun or in some excluded island using Starlink somewhere in the world. How does all this fit in?
I think it's a great question, because I actually thought about that a lot. Like, how is this even measured? A lot of the projects, they're not posted on GitHub or something. So how would you know how many developers there actually are? Like some projects that I have followed in more detail, those developers are not public anywhere. So how would someone count those? And those were on Solana, by the way. So yeah, I don't know. I think the data could definitely be completely wrong. There could be differences in culture also, that maybe if you're developing on Ethereum, you want to show everything public to get the recognition by Vitalik or something like that. If you're building some meme coin on Solana, maybe you couldn't care less. You just want your coin to take over the world and, become billions of dollars from Andrew Tate's channel or whatever it is. Perhaps it's different incentives, and maybe you explicitly don't want to be on GitHub in public, perhaps.
Exactly. And this a big source of the data for this is GitHub, by the way. So there are people that maybe there's a whole bunch of skunkworks development happening on different chains where they're doing it secretly, not on GitHub. Mando, do you look into this at all?
I haven't looked into it that much. I mean, that data surprises me in that Solana is so low on that list. That being said, like, whenever I've tried to look for Solana dev, they're far more difficult to find than ETH dev. Yeah. That's generally what I have found in this space. So
that's what Mert said. That's exactly what he said in the tweet. He said he's got more developers than are publicly listed in Polkadot. And Polkadot is massive, number 3 on this list. So that makes sense.
One thing I would say is, because a lot of those are EVM, so ETHmatic, ARB, I don't know what language Atom, Cosmos, and Polkadot are written in, but you can probably say you're a dev across multiple of them. But Solana is written in Rust, so generally they can't say, there's fewer that can also then be who are also like EVM devs, which is written in Solidity. So that's one thing I would say, is that some of the numbers that are behind ETH are probably massively elevated just because somebody who's an ETH dev says they're also a Matic dev, because it's very easy for them to do. They're basically just an ETH dev. But that's something I would say.
Yeah. Definitely. No, but I think it's very interesting. I think some similar data that's interesting to track is this TVL, a total value locked, where I mean it's debatable if it's valid or not, because again, that's market cap, it might not be real money. But a few things are interesting here, and that is that if a thesis is that Solana is still coming, there's still a lot of room to grow here in terms of TVL for Solana compared to Ethereum and even Binance Smart Chain and Tron, actually. So I think that is interesting. Another thing that I think is interesting that I saw actually on Ivan's channel this morning, and that is that Base has now passed optimism in some metrics. Can discuss how it should be counted and so on and so forth. But in several metrics, Base is still growing and has actually passed one of Ethereum's flagship hopes, or L2s, which was optimism. I thought that was noteworthy as well. What do you guys think about the Base chain at this point? Will it become like a top 3 or top 4 chain, or is it overblown? I mean, touching on what you said before, Mando, about Binance, the company, being a very large and significant player, and I mean Coinbase as well. They could potentially pump a lot of money into this.
Yeah, I think it's arguably, I would say it's the third biggest chain in crypto right now, in terms of if you exclude Bitcoin. Let's say Solana, ETH. I would say Base is there. Arbitrum, you could argue, is there, but I think Base is seeing more activity, at least in number of tickets. The TVL is quite a deceptive metric because Arbitrum is big in DeFi, whereas Base has gone more for, let's say, consumer applications. And DeFi lends itself to higher TVL, perhaps lower users. And I think Base has really kind of gone the opposite metric and really gone for users and transactions, kind of the Solana style route more. So I think Base is going to be a very, very big chain. I don't know if they'll ever do a token. Maybe they will after they finally see the end of Gary Gensler, but I do think that Base is going to be Base is definitely going to be here for a long, long time. And out of all the ETH L2s, it seems to have captured people's attention the most.
Yeah, I think Base is super interesting because it's what I call the blockchainification of everything. So you got all these TradFi and centralized exchanges leveraging much more blockchain stuff to become much more of a hybrid kind of centralized exchange, decentralized exchange. So that's really cool. But Base as a layer 2 on ETH that has fundamental problems. Their transactions, they do about 30 transactions per second, which isn't going to cut it in the future. And the time to finality is 16 minutes. I mean, that doesn't work for real exchanges. And then there's also, speaking of blockchainification of everything, all the talk about the new BlackRock funded exchange to compete with NASDAQ. And
interestingly, I had heard through the grapevine that a lot of BlackRock's tokenization plans were for Base, as in that's where they were going to do a lot of their tokenization, because they've got deals with Coinbase for custody.
Yeah.
And so if they were going to ever start attempting to tokenize their funds, they would do it on Base. That being said, there was also a rumor this month that BlackRock's about to launch a Solana ETF. So a lot of rumors through the grapevine, but yeah, that's what I'd heard. But
how do you guys feel about this then? Is it really, decentralized, or is it just like a private company here? We have one comment here. I can't figure out how to move value into
centralized.
It doesn't get more centralized. There's off-chain governance, etc. Oh my God, it's in Armstrong's pocket, basically.
In the same way that Binance is also.
Yeah.
Like, I think you can have big companies in crypto that want to have a slightly more centralized chain and want to have security aspects which are more centralized. Interestingly, a lot of it is actually was created using Optimism's tech stack, which why that flippening was very important, because Optimism basically built a lot of the tech, which is now being used by Base. But yeah, it's centralized.
So.
How's price doing? Yeah, we're close to
It hit $70,013 and then mean reverted again. Wash, rinse, repeat. I think we will be in a holding pattern until at least the 15th of July. That'll take us to 90 days after halving, which is typically what it takes before rocket boosters to kick in. But there's money flow now like never before, so that could change the calculus of that, bring it forward a little bit.
One thing I was thinking is that we've spoken about the basis trade or the carry trade, whatever you want to call it. Not everyone would have picked up on that. They'll be seeing huge inflows going in, and they'll be like, "I don't want to miss this." And particularly in a few months, when you start to see all these hedge funds showing that they've bought it, that will also FOMO more TradFi that aren't doing this basis trade. So part of what I like about this is that it will FOMO people, real buyers.
And you're so right there, because the 13F filings also FOMO'd a bunch of pension funds in the US. I know firsthand. Like when Wisconsin dropped a ton, I can't remember what their allocation was, 3.9% or something into this thing.
Yeah.
Wow. That got a lot of attention from a lot of traditional pension funds. They never even knew this was an option. So the Q2 13F filings, which they'll be out sometime middle of July, we'll get the first reports approximately. That'll also turn some heads and again create further FOMO. So it's like the wave is just beginning, and that's a really important thing to look at, especially when you look at stock market valuations. And 60% of the S&P 500, I believe, are zombie companies that have no upside. It was a super study as well that came out from Charlie B over the weekend. And if you're not in the top 10 stocks, you're toast. You're not going to make it. It's as extreme as crypto. You got to be in the winners, unless of course you're playing memes and everybody wins.
Should we talk a little about those as well? If we have any particular things to point out, Nvidia done the split, which is psychologically works on for some reason. Hard to understand. In crypto, we don't do splits, right? We just like the higher price. But of course, in stocks, you can't own a part of a stock often. So that's why they need to do it. Nvidia looking fantastic. MicroStrategy, I know that, James, you are a big MicroStrategy fan. You had huge success with this. Tesla is still holding support, but hasn't really turned the trend up here. Is there anything worth pointing out here, you feel, in our remaining minutes?
Well, start with MicroStrategy that's holding tight right now. There's a new MicroStrategy called SMLR. That's actually pumping today up over 20%, 21%. So again, people are kind of FOMOing into that. The Nvidia, typically, I've been watching stock splits and trading options on them for decades. And typically you get a post-split duck. You get the run-up pre-split, and then it kind of fizzles out. But also you get retail now is able to buy. The big difference with Nvidia is it's gone from a $1,200 stock to a $120 stock. And everybody who's been wanting to buy Nvidia now they feel they can. It's stock splits make no difference to nothing except for volume. So a lot of people might be, retail investors particularly, might be buying Nvidia right now. But I don't think I would, it's a great company and it's had the most incredible run, but I wouldn't be buying at this level. And then Tesla has a lot of tailwinds happening, despite every mainstream media outlet on the planet going after Elon Musk. Under the covers, there's the most incredible things happening. So, and they're on the breakthrough of FSD, which is self-driving cars, autonomy, with very low cost. Like a $30,000 vehicle is a robot that'll take you anywhere, even into the middle of a field. So all this stuff is coming. And it just shows you, again, the key point I mentioned earlier, high interest rates do not impact things like Nvidia or disruption. So don't be afraid to step into disruption, even though interest rates remain high. That's probably a key message here. Amanda, what do you think of that?
Yeah, I find it difficult to time single stocks, but I would just be buying the Magnificent Seven and probably a few others. Some of the defense tech stuff I think could be very interesting. But yeah, I think it's all just going high, if I'm honest. Like, yeah, Nvidia feels high, but hold on to your winners. Like, I wouldn't sell any of this stuff. I had a deep dive into Nvidia a couple of weeks ago, and I was like, this business is probably going to be okay for a while.
Oh, yeah.
At least the next 18 months, 2 years. So yeah, I'm a buyer of all of that stuff. I like also that when any of these guys seem to be in trouble, they just pull a lever and there's something else. They just have huge war chests and they're able to use them. I think they're the main winners of the next 10 years.
Yeah. Should we? This is really your expertise, Mando. What do you see in the NFT meme coin trends?
Just huge volumes, absolutely mind-bogglingly massive volumes. Again, do not fade that this is going to be a huge trend. This week you saw, I spoke about it last week. There were some, I would say, D-tier celebrities last week that came in, and then you're starting to see slightly bigger, more well-known names. Like I said, Andrew Tate, who's a relatively well-known individual now, came in and did a few meme coins, and that those went absolutely crazy. That's dominated the terms of volumes. I wouldn't say there's any like huge winners. Like a lot of the coins that were doing well, like the political meme coins, all kind of came off from a high, and even some of the bigger ones like Pepe and Whiff haven't had a great couple of weeks. But what it tells you is that the volumes are still there. Like people are moving into new coins every second, and that's been dominating it. I would say, by and large, ETH coins have been holding up slightly better than Solana, but there's fewer of them. Whereas Solana, there's been a lot of talk about this number of new coins every day. I think there's 500,000 coins in the last month alone on Solana.
500,000 coins in last month.
Yeah,
it goes back like the crypto market. It shows you what a BS statistic the crypto market cap is. If you just took those meme coins and looked at the amount of issuance and the price and added it all up, that would be in the billions, maybe hundreds of billions.
And there was actually, I think, Anatoly went on Bankless this week and kind of sparred with them about the difference in the two of them, and there was some talk about like quantity over quality and the fact that ETH has fewer, but some of them have higher market caps. My view is that culture, whether you like it or not, is largely being played out on Solana this cycle. TVL is still on ETH, but right now Solana's still got the culture. I think we've spoken about this several different times. I think it's undeniable. It's not really a question that that's what a lot of people are doing on a daily basis in terms of transactions. But I would say that over the long term, you have to question: is this good for the long term health of that meme coin that you own that is 500,000 per month? Don't know. Like maybe it's good for the chain. Solana, it's tough to imagine. I couldn't imagine why Solana was lower this week with those sort of crazy volumes. But I think you have to also respect that when you get involved in this sort of stuff, memes have a life cycle. I think we've spoken about that on this stage before, and only a few of them last for a long time. Just like memes in real life, memes culture sometimes is quite transient. It doesn't stick around forever. And I spoke about what it was like, whenever there was anything mentioned about Trump when he got convicted, there was people going to Pump.fun, they make meme coins. There'll be people making meme coins right now about like the French election that happened today, and maybe one of them will pump during the day or something like that. And that's what people are doing. So any news event that you see, that's what people are doing at the moment.
Amazing. Bitcoin over 70,000 on
Oh,
the
really?
stream.
Nice.
Yep. Broke
Thanks,
through to the other side. Yeah.
Thanks, everyone.
The DCA pump is alive and well.
Yeah, exactly.
But it's Monday.
Right.
It's the Monday DCA best day to buy.
Yeah, exactly.
You got to do it literally at like midnight or 1 a.m. UTC. Not after this show, everybody. So I hope that's perfectly clear. Before the show.
It's so funny. We've sat here so many times, and it has literally pumped either just before the show or during the show.
That's why we picked the time zone to get people excited,
Yeah.
All right.
Yeah, come on, guys. This week, all right, I'm going for a 75K. That's going to be my prediction. Let's try and break through this week. Let's have a nice.
Hopium is back.
If we break through 72, that's a pocket all the way up, in my opinion. So
Oh,
Let's
that's
hope
when the
it
short
ends-
covering happens. That
Yeah,
and
exactly.
I can't remember the size. It's $30 billion or something.
It's
It
insane.
is
Yeah.
massive, biggest ever. So if that 72K roof is broken, the short liquidations will be toast, and we could see. In fact, if we go through 72K with momentum, 75K is a lock
Oh,
because
yeah.
the covering will take us up $3,000 in the candle in no time, I believe.
Yeah, so hopefully FOMC on Wednesday. I mean, I assume that we're just going to hack around here around 71K for the next couple of days, and then maybe Powell sends us through. Let's hope.
Oh, absolutely. If
We
we
need-
break through this resistance and stay there, not just transient back up, there's going to be a lot of people who have short stops there, and other people who will get liquidated, because it's a reasonable bet that this resistance will hold. And then if its price is pushed through there, a lot of people will get liquidated, or they will need to cover, and so on. So it is definitely interesting. I don't know where we will be next week. I don't know when we will break through this, but I think we will. And I do think that Bitcoin will hit 100K. Absolutely, like we had in the thumbnail. So yeah, it's absolutely, I think so. I hope we get some unexpected price action before perhaps this thing that we or Mando has uncovered with a carry trade or basis trade could trick people into thinking that there is bigger inflows than there is, and then a huge dump instead. If we get something like that, don't be angry, guys. Prepare yourself. So if it happens, you can take advantage of it. I'm not saying I think it will happen, but if something like that happens, if we get a dump in an uptrend, that's what we want. We want a big dip with the uptrend intact. That's the best buying opportunity. The worst place to buy is right below resistance, which is the kind of beginner mistake. So we hope for either breakthrough, breakout entry, or an entry on a dip.
And one
Buy-
one last piece of advice is, if you go into markets assuming everything is manipulated and all data is fake, you'll be much better off. So go in there being ultra paranoid, and then you're prepared. Amanda, you're laughing.
Yeah, I love that. I love that.
Yeah.
Just follow the total liquidity and ignore everything else.
Yeah, exactly. Follow the money. Awesome.
Any final word for the week, or
Just come on, guys. Let's get through this level. That's all I want to see. I don't want to be on here next week and we're at 69K again.
For 69K. Oh, you got to wear something funny if we are 69K again. So like a Christmas hat or
I'll put on the
something.
banana zone
Yeah.
outfit.
You probably have one. You borrow Raoul's.
Sure.
Awesome. Well, thank
thanks
you, everybody.
everyone.
Great to see you guys again. Have a good weekend out there, team, and see you all next week.
See you next week.
Thank you. See you next Monday. Take care. Bye.
So I hope it's still live. It's still running with you and me. If you forgot to stop it.
I'll end the stream.